Hello, this is Lance Zimmerman and welcome to the CattleFax closing bell for Thursday, April 21st. Today's top story, the USDA Cattle on Feed report. Aggressive marketings are keeping U.S. feedlots current and feeder cattle availability remains strong. This was the key takeaway from this afternoon's USDA Cattle on Feed report. The report summarizes the results of a monthly survey to feedlots with at least 1,000 head in the 17 largest cattle feeding states. The USDA provides numbers for cattle in feedlots, cattle placed in feedlots, and cattle marketed for slaughter. In general, the report met industry expectations. On April 1st, there were 11.3 million cattle on feed. That number was 105% of a year ago. March placements were listed at 1.9 million head. That was 103% of the 2010 figure. Marketings were noted at 104% of last year. While the numbers were within 1% of industry estimates, cattle on feed and placements continue to stand in contrast to previously reported U.S. calf supplies. Beef cow numbers are down 6% over the last 5 years, and the feeder and calf supply outside of feedlots is nearly 3.5% below a year ago. So where are the calves coming from? There are two possible explanations. It's possible the USDA estimates for cow and calf inventories outside of feedlots are too conservative. However, weather seems to be the more likely cause for increased feedlot placements. In last week's closing bell, Troy discussed the devastating drought through most of Texas and parts of Oklahoma and Kansas. Rain's simply been hard to find in these regions since last fall, and this has affected wheat and grass supplies typically used for grazing. It's also forced potential stocker calves to feedlots earlier than anticipated. Placements of feeder cattle weighing 700 pounds or more were down 6% year-to-date in February, and improved last month to only being down 0.5%. The balance has also shifted in terms of feeder calves placed in feedlots at less than 700 pounds. The number of calves in those feedlots under 700 pounds is up 6% year-to-date, but down 4% relative to a year ago. Compared to the 5-year average, these calf placements are up 5%. Grass cattle coming into feedlots earlier in the year as calves sets the feedlot industry up for an interesting supply scenario this summer and fall. It appears that the lighter calf placements are beginning to slow, and heavier feeder cattle are beginning to again resume a normal pace. However, the potential exists for exceptionally tight feeder cattle supplies later this year. Placements will continue to be an important supply indicator to watch over the next few months. Now, your weekly market summary. The fed cattle market was mostly steady this week as cattle in the south sold for $119. Values in the north were primarily $190 to $191 dressed and $119 to $119.50 live. Trade volumes were light to moderate. Box beef traded softer on the week. The spot market remains dull, but higher prices for May-delivered loins and ribs supported the prices earlier in the week. Feeder cattle prices were steady to $2 lower, while calves were even to $2 lower, with some lightweight calves as much as $10 lower. Slaughter cows were $2 to $4 lower as well. Corn prices were sideways in a volatile trade this week, while wheat and soybeans ended the week mostly 40 cents higher. Thanks for watching, and be sure to visit CattleFax.com for the latest market news and analysis.